If you're currently on Medicare and you're wondering what the Medicare premiums will look like in 2025, as well as any additional Medicare premium surcharges you might have to pay, then keep watching this video as I'll be covering those latest updates that have just come out as they were announced by Medicare. Welcome back. This is episode 228. On November 8th of 2024, the Centers for Medicare and Medicaid Services released the 2025 premiums, deductibles, and coinsurance amounts for Medicare Part A and Part B programs, as well as Medicare Part D, and any income-related monthly adjustment amounts that may apply. So in this week's episode, I'd like to go over those numbers, as well as talk about some strategies that can potentially help you to avoid paying more than the standard Medicare Part A and Part B and D premiums. If you'd like to learn more about Medicare, then as a bonus for being a listener and watcher of this episode, I'm willing to send you a free copy of a great book on Medicare. It's called 10 Costly Medicare Mistakes That You Can't Afford to Make, and it's by Danielle Roberts. She's a Medicare expert that I've had on the podcast in the past, and she's also actually scheduled to come on in a couple weeks to talk about Medicare open enrollment. So to get a free copy of this book, if you leave me a review on either iTunes or Spotify, and once you've left that review or that rating, you can then head over to retirewithryan.com, click on Ask a Question, let me know when you left the review and where, and what your mailing and contact information is so that we can get the book out to you. And I appreciate anyone that's left a review in the past, and if you do it in the future as a free bonus, as I said, we'll send you a copy of this book. So once you're enrolled on Medicare, you will then receive a letter from the Social Security Administration about this time of year letting you know how much you will be paying for your Medicare premium for the upcoming year. And we already know, as I said, Medicare has announced what the 2025 premiums will be. So for Medicare Part B, the standard premium is $185 per month per person. And this is an increase of about $10.30 over the Part B standard premium for 2024. Medicare Part A, for most people, is generally free. And as long as you paid into Medicare Part A, your spouse has for at least 10 quarters, and so that's generally, 40 quarters, so that's 10 years, then you don't pay for a premium for Part A. And Medicare Part A covers hospital stays. However, every time you have a hospital stay, if it's a new admission, you potentially have to pay a Medicare Part A premium deductible. And that deductible for 2025 has gone up to $1,676, up from $44 in 2024. So this covers the first 60 days of any hospitalization that you have. If you stay beyond 60 days, then you have to pay $419 a day for the 61st to the 91st day. And then if you happen to stay beyond that, then you have a lifetime reserve amount, or they're known as lifetime reserve days. Everyone has 60 of them in their lifetime. So you would then have to pay $838 a day in 2025. And if you go beyond those 60 days, then you would have to pay 100% of that out-of-pocket cost. So these reasons, having this Medicare Part A deductible anytime you have a hospitalization, is a reason why a lot of people end up buying a supplemental Medicare plan. And I've covered that in past episodes, but that's definitely something you want to look into because it can help to cover these costs and also cover the cost if you go beyond the 60 days that Medicare pays for. So the standard Part D premium, if you're on Medicare Part D, is $32.74 for 2025. This is also a slight increase. So with Part A and Part D, it's possible that if your income exceeds certain levels, you could end up paying more than just the standard $185 or $32.74 a month for your Medicare Part A and Part D. So this is called a Medicare Income-Related Monthly Adjustment Amount, or IRMAA for short. And Medicare bases this on your most recently filed tax return. So it's generally from a tax return from 2 years prior. So for example, the 2025 premiums that you'll be paying is going to be based on your 2023 tax return. So that is, again, the most recently filed tax return that the IRS has. And it's based on your modified adjusted gross income, which is your gross income plus any tax-exempt interest that has been earned or accumulated from U.S. savings bonds or if those were used to pay for higher education. And you also need to add back any earned income while living abroad and income from specific sources not included in your adjusted gross income, such as if you live in Puerto Rico, American Samoa, Guam, or the Northern Mariana Islands. So again, this is a calculation that's done. Either your accountant's doing this for you. If you have tax software, it's calculating what your modified adjusted gross income is for Medicare purposes. So if you look at the chart that's come out as far as what the adjustment amounts are, you can see what these additional amounts might be. And again, this is episode 228. So if you want to see this, if you're listening, then you can head over to retirewithryan.com/podcast/228. Or if you're watching, I'm going to show these in a minute. So we have three categories. We have filing single, married filing joint, and married filing separate. So for 2025, if your income is over $106,000 in 2023, that is, this is what determines your premium in 2025, or over $212,000 for someone married filing jointly, then you have to pay an additional $74 a month per person for your Medicare Part B premium, and you'd pay an additional $13.70 for your Medicare Part D premium. If you then go over $133,000 of modified adjusted gross income for a single filer, or $266,000 of modified adjusted gross income for someone married filing joint, you'd pay an additional $185 a month for Medicare Part B, and you'd pay $35.30 per month for Medicare Part D. If you then go over the next bracket for a single filer, which is $167,000 of MAGI, or $334,000 of MAGI, now you pay an additional $259 per month for Part B, or $57 per month additional for Part D. So again, I might have misspoken, but this is additional on top of the $185 or the $32 in change Medicare Part D premium. And again, we have all the brackets here. If you're listening, you can head over and see all of them. But the highest bracket would have you paying an additional $443.90 per month for Medicare Part B and $85 a month for Part D if you make over $500,000 for a single filer and $750,000 for a joint filer in 2023. So if you are married and filing separately, that doesn't have as many brackets. The first bracket starts at $106,000, and you'd pay an additional $406.90 per month per person. So that's a major increase for Part B. For Part D, you'd be paying $78.70. So the last bracket, there's only two brackets, additional brackets for married filing separately. The last one is that if you go over $394,000, you're paying $443.90 extra for Part B and $85.80 extra for Part D. So you really get penalized if you are filing married, filing separately. You're paying a lot more for Medicare Part B potentially. So it's definitely something you'd have to decide, is it really worth it? So again, head over to retirewithryan.com/podcast/228 if you're listening. If you're watching, you're able to see these numbers. So obviously there's a 2-year lag on this number. So if you're getting this, you really don't have anything you can do because your 2023 return has already been filed, right? You could possibly amend your return if there was a mistake on it, something that you did accidentally that would lower your income, and then you could reach out to Social Security potentially to lower your premium. So if the numbers are correct, there are some reasons, however, to appeal. And so there's a form that Social Security has. It's form SSA.44. And there are 8 reasons on this form, and I'll tell you what some of those are. So the 8 reasons are marriage, divorce or annulment, death of a spouse, work stoppage, work reduction, loss of income-producing property due to a disaster, not a sale, loss of pension, or an employer settlement payment. So the big one is that let's say you retired this year in 2024, but in 2023 you were working. Well, that is a reason for appeal, work stoppage, work reduction. You can appeal, you submit some documentation, and Medicare could then potentially lower the premium that you're going to have to pay in 2025. If you lost a spouse, if you got divorced, right? If you had a rental property, let's say, that burned down, was destroyed due to a hurricane, a natural disaster, then these are reasons to appeal. But if you don't meet the criteria for any of these 8 reasons, unfortunately, you're stuck paying this additional premium for your Part B or Part D Medicare. So you can possibly do some things for future years, and this is where even in retirement, unfortunately, you still need to keep an eye on your income. Obviously, you're keeping an eye on your income for the taxes that you might pay by taking out more money from your IRAs or 401ks or triggering capital gains. But you also have to think about, is this going to potentially jeopardize what I'm paying for my Medicare premium? Because this is extra money that you're paying. Now, some of this might be unavoidable. Maybe you're just fortunate that you have high income in retirement, you've got a pension, you've got Social Security, you've got other income either coming from your retirement plans or maybe rental property income, but that's all going to be factored in. So what are some things that you could do? Well, one thing is you could donate some money to charity. Well, if you're over 73 and you have to take out money from your retirement accounts, known as required minimum distribution, you could donate some of that to a charity through what's known as a qualified charitable deduction. And that's a way where, let's say you had to take $20,000 out of your IRA for your RMD this year, you donate some of that or all of that to a charity. It goes directly from your IRA to the charity, and therefore that's not taxable income to you. So that's one thing that you could do. You possibly could use a donor-advised fund that I've talked about. This is a way to potentially lower your taxes, and even cash donations. So that's one way. You could potentially put more into your retirement accounts. Let's say you're still working and you happen to be working into your 70s and you're still earning money, then but you've gone on Medicare because it makes sense. You could potentially put more into your retirement plans to lower your income so that you wouldn't be subject to this additional Part B or Part D premium. You could potentially, withdraw money from Roth accounts. So if you have the ability to choose where your money comes from, maybe you've been taking everything from your 401k or IRA, not really paying attention to the IRMAA surcharge you might have to pay. Well, instead, maybe if you have some Roth accounts, you could take some money from there, and that could lower the amount of taxable income that you have because a Roth distribution is not considered income. It's not subject to modified adjusted gross income. You could also just be cognizant of these capital gains that you might be triggering. Let's say you have investments, you have stocks that you're turning over quite frequently, realizing your gains. Well, maybe you could hold them more for the long term, and you could generate less capital gains, which could then potentially lower your taxable income so that you're not subject to IRMAA. And the other thing is that you can just kind of plan ahead. If you're close to the line of triggering IRMAA, maybe in certain years you take more out, you pay the IRMAA for a couple years, but then if you've taken more out in 1 year so that you've triggered IRMAA, but maybe not gone into the next bracket, you could then have that money sitting aside, and then you can use that money as needed, but you've already taken it out and paid the tax on that money from your IRA so that you're not subject to additional IRMAA as you go forward. This is possible for some people, right? It all depends on your taxes. There's definitely some tax planning that you need to be doing in retirement, just looking at not only the federal and state tax you might be paying, but also the IRMAA surcharges. So again, be aware of what the 2025 Medicare Part B, Part D premiums might be for you. We've covered what the standard premium is. If you think you're going to trigger IRMAA, then look into whether or not you can file an appeal. And if you can't file an appeal, then investigate whether or not there's anything you can do differently to potentially lower your income in future years so that you're not subject to IRMAA. These brackets go up a little bit each year, but they're not changing in a massive way. So if you are subject to IRMAA and it just something that you're going to have to deal with. You just need to make sure that you plan accordingly and also see if there's any way that you can potentially lower your modified adjusted gross income in retirement. So I hope you found this episode helpful. As always, if you have a listener question, head over to retirewithryan.com and click on Ask a Question. And if you'd like to receive a free copy of that Medicare book, please leave me a review and then submit your information on retirewithryan.com under Ask a Question so we can send you out a copy. Have a great week, and I look forward to talking with you next Wednesday. Take care.